What's up, everybody? I'm doing a live stream during the market hours, so maybe we can see how the market's performing today. Let me know what websites do you use to look at the market. I always look at, this is in my browser. It's like one of the saved bookmarks. It's tradingview.com. I think it's pretty user-friendly. It gives me a lot of information on how the market's doing today. I always like to look at the biggest gainers and the biggest losers every single day. I usually do that. But this gives you a lot of information. You can look at all stocks, and this is alphabetized. Or you can look at large cap, small cap, largest employers. Of course, that's Walmart is the largest employer in the world. And then you could break it down. Let's see who's the top gainers for the day. Top gainers. That's always fun. Kazoo Group. Oftentimes, the top gainers are going to be small cap stocks because they move a lot. They're pretty volatile. Okay, so number one is Stoke Therapeutics, 62% today. Biotech companies a lot of times fall into this area. DWAC, Digital World Acquisition, up 38%. That's a pretty big company, 2.6 billion. Krispy Kreme, 29%. Why is Krispy Kreme up so much? Let's take a look at Krispy Kreme. Did they report earnings yesterday? McDonald's to sell Krispy Kreme donuts nationwide. That's why. So that's huge. If a company like McDonald's is giving you their blessing, and there's, what is there, like 50,000 McDonald's stores? That's a lot of distribution. McDonald's to sell Krispy Kreme. Right. I hate these ads. I can't even shut off. Holy cow, that's annoying. Okay, let's see what they say. McDonald's will sell Krispy Kreme donuts nationwide by the end of 2026. So they're not going to start selling it for 2 years. Both chains announced on Tuesday. Oh, by the end. So sometimes between now and 2026, they'll be able, because I guess kind of logistically, it does take time to get everything set up. 3 flavors of Krispy Kreme donuts will be delivered to McDonald's restaurants daily as part of the expanded partnership. The original glazed, chocolate iced, and sprinkles. Chocolate iced with sprinkles and chocolate iced cream filled. What's your favorite Krispy Kreme donut? Do you eat Krispy Kreme? That's been a great investment. That's a good ticker, D-Nut. Talk about yeah, I did a quiz, like what are the coolest tickers, like Cake for Cheesecake Factory, Bud for Budweiser. So it looks like they started trading in mid 2021. Huh. They were trading well before mid 2021. They must have went private at one point. Because I remember like in 2003 or 2004 they were trading. Okay. Yeah, lots of times a company is public and then it gets acquired by a private equity firm. and it goes private, and then it goes public again. Okay, so it talks about it right here. Okay, Krispy Kreme, okay, founded in 1915 and 1970. Okay, so steady growth preceded an ambitious expansion as a public company in the period 2000-2016, which ultimately proved unprofitable. In 2016, the company returned to private ownership under JAB Holding Company, a private Luxembourg-based firm. In July 2021, they became publicly traded again. So yeah, so they were public. I remember in the early 2000s when the stock was trading. Their name is a sensational spelling of the words Krispy Kreme. So I put at 19. So not a good investment at all. It is up a lot today because of that McDonald's announcement. Revenue is up to 1.7 billion. Negative free cash flow in 2023. Positive in 21-22. Negative in 2020. Okay, so Krispy Kreme, big news, big jump, you would have lost money with Krispy Kreme unless you bought it at the right time, because you can see the stock is not really doing so great. What's up, Dex? Let's see what else is going on. Kazoo Group, that sounds like a travel company. Kazoo Group. So Kazoo Group is up 9% in pre-market trading. Okay, this website sucks. They don't really give much information. I want to find out why they're up, not just that they're up. What is Wall Street's target for Kazoo? So I'm not really sure why Kazoo is up today. There must have been some announcement. Kazoo is a British online car retailer based in London, England, founded in 2018. So it's pretty new company, Kazoo Group. 27 million market cap, so tiny company. Really risky to invest in these. DWAC. I'm sure you guys are familiar with DWAC. That was a SPAC. It was founded in 2021. So a SPAC is a public shell company that acquires a private company. It's kind of an expedited way to go public. In October 2021, the company announced proposed merger with Trump Media and Technology, the owner of Truth Social. In March 2024, the company completed merging with TMTG. Yeah, so this interesting stock. It had a really big run up, I remember initially. There's really no, why is it digital word acquisition code? Okay. DJT. Okay, they changed the ticker. That's why I'm looking at the old ticker. So DJT is a new ticker. So you can see every SPAC, pretty much every SPAC, like 99% of SPACs start at $10. So you can see it was $10, and then it shoots way up when it starts trading. So you can't get into the stock before it shoots up. You just don't have, even if you time it, like it's only like kind of like insiders and big institutions can buy the stock at 10. It went up to 90 in a week. In a week, it went from 10 to 90. Then it came down. But the problem is, when it comes down, like, when do you buy it? I mean, do you buy it at 50, 40, 30? I mean, if you were able to get it at 50, which is possible, you could have wrote it back up to 100, but then you would have to sell real quick because it comes right back down. But the stock is up a lot. It was 37. Now it's 70. Let's see what they say in the news about it. Okay. So shares of Donald Trump's social media company jumped more than 30% in the first day of trading on the NASDAQ, boosting the value of Trump's large holdings in the company. But this will probably come down. The only way a stock can go up and stay up is if the fundamentals are there. The company needs to make money. So Trump Media and Technology merged Monday with a blank check company. That's what a SPAC is, a blank check company. They just acquire a private company, which runs a social media platform. Truth Social has now taken Digital World's place on the NASDAQ. Before trading, Trump Media had a market value of $6.8 billion, a figure that will rise significantly if the gains in the shares hold. Like exactly what I said, the gains in the shares have to hold. They have to fundamentally prove they're worth these numbers. The shares are trading under the ticker DJT. Trump holds 60% ownership in the company, so he's doing well. He's going to dump a lot of the stock, so don't expect him to just sit on it. He's going to take it. He's going to monetize those you could almost guarantee that. Let's see. This is Simply Wall Street. It's taking a long time to load. I want to see the ownership breakdown, but they might not have it. I don't think they have it listed. It's probably too new. There's probably not enough information out there to pull from, because usually you would see ownership information, but unfortunately it's not here. Let's see, do they have a valuation? No valuation. So it's not much going on. Let's see if DWAC, they have some ownership information. This has been around a little longer. Well, this is the SPAC. This is not Trump's company. This is the SPAC before it got acquired. So yeah, we don't have much ownership information. Okay, let's so what do you got? Are you guys buyers in this digital world? The Truth Social. Let's see what they say about Truth Social. Truth Social is an alt-tech social media platform created by Trump Media, an American media and technology company founded in 2021 by Trump. It has been called a Twitter clone that competes with Parler, Gab, and Mastodon in trying to provide alternative to Twitter and Facebook. So it's an alternative to X. I can't imagine it being that popular, and people, because the only way you could be really popular and compete with Twitter, Facebook, Instagram is you need a lot of people to join. That's what you really need. You need millions, possibly billions of people to be on the app. What's up, Quags? I'll wait for the first earnings report. Yeah, it's gonna go down. It's a junk stock. I can't imagine it going anywhere. Let's see. Nuvation Bio. So if you ever look at these big gainers or big losers, you see lots of biotech companies, because biotech companies are usually pretty small. You see 647 million. And then once these companies announce that they have a drug that completed like phase 1 or phase 2, of clinical trials, the stock shoots way up. Oh yeah, SoundHound. That's a big AI play. Let me know if you want to donate, and I could run a DCF on any company you want. I'd be happy to do that. Let's take a look at Sound. Okay. SoundHound. That's a good one to look up. I think ticker SOUN. SOUN. Okay. The future free cash flow is projected to be negative, so we have to do a little different type of model. So SOUN. So to do DCF, we need the weighted average cost of capital. That's the discount rate we're going to apply to the future cash flows. And every company has different WACC depending on the risk of the company. So 9, it's between 9 and 10.5%. And valuation is an art, not a science. So everybody's going to have a different valuation. Because who could predict the future, really? It's impossible, right? So 6, 1.8. So it's not a small company, 1.8 billion. Especially for a company that's not generating any profits. So negative free cash flow every year. And let's look at their revenue. The good thing about revenue, it can never be negative, right? So at least you can get a good value. With other numbers like net income and cash flow, it could be negative. So it's hard to really know how the company's doing. That's why revenue is a good indicator. I'm just going to get it. I'm going to get the model set up, and then we'll go through the numbers. A lot of growth, projected growth, 46. So let's do 50, 70, 100. Okay. Okay. DJT might be a good stock to swing trade. If you want to make money on a stock like DJT, the only way you could do it is a swing trade or short-term investment. On a long term, there's no chance of that company being successful. Okay, so based on it's a hard stock to value because it's all negative, and even if I project their revenue to grow, I mean, the analyst projections are 100 million by 2025. So if I assume the 100 million by 2025, and I even grow it, let me double it to 200 million. I'm still at $2 a share. So yeah, it's a tough one. It's really an AI play, right? These kind of companies. It's been getting a lot of press, SoundHound. Yeah, it's voice AI speech recognition. It was founded 19 years ago. It's not a new company, but that's a big deal. Voice AI, because a lot of times you're on the phone talking to your credit card company, and then they ask you to say something into the phone, so you get to the next step, and you say like your name or you say your credit card number, and then it doesn't really pick up. So they've been using voice recognition for a long time, but of course it goes into a lot of other things, not just stuff like that. Music recognition. So if you're listening to a song, anybody invested in SoundHound? Any so you can see it IPO'd in 2022, so 2 years ago, at looks like 650 about. It shot up a lot right away. It doubled like within 2 weeks, and ever since then it's come down. It is up to 8. It did hit 9 recently. But when you see this big run up, like you don't know when the run up will stop. It happened to stop at 9. It usually comes down, and when it comes down, it usually comes down to a little higher than what it was before the run up. So you can see 170. So it might come down to like 3 or 4, which is a common, and then it'll have another run up. Because you see that with even big companies, when they have a big run up, it's not sustainable. But when it comes down, it usually doesn't come down below. This is Meta, which is a little harder to. So you see, it ran up, and this was in 2018. It ran up to 207, and then it regresses. It regressed to like 130, so it went down like 45%. So it came back down to like 2016 levels. Then it came up to 208, so a little past this, regressed. But usually over time, it does go up. This is just abnormal growth, and even decline with Meta was pretty abnormal. I mean, went below 100. But stocks with good fundamentals usually go up. Let's look at something maybe not as severe. Companies with bad fundamentals, when they regress, they don't really come back up. Amazon is still trading below its 2021 levels. So if you're looking for one of the Mag 7 stocks, Amazon could be a good one because it's still trading below its all-time highs. Where other companies like Meta is trading all-time high, Nvidia all-time high. Well, Apple probably is not trading an all-time high because that's been coming down too. The antitrust violations. So Apple did hit its all-time high just like 3 months ago. So it is down from 3 months ago, but I almost bought some but held back. Yeah, SoundHound. But I just finished a video on Lululemon. This is a really interesting stock. It's kind of like you look at this and realize, where was I? How come I never really looked at Lululemon? Like kind of put it on the side, thinking, oh, they're just a retailer. Retailers struggle. Sometimes they go to business. But this is a really, really solid company. And the stock is down like 25-30% from its peak. I mean, look at the revenue growth, 6 billion, close to 10 billion. And they're really, really profitable. Their net income for 2024 was 1.6 billion. Lots of cash flow. They're growing more than any apparel retailer. I'll show you. This is a chart for every apparel company that's publicly traded. So TJX, they're the largest apparel retailer, 115 billion market cap. Lululemon is second. And I bet your TJX stock has not done nearly as well as Lululemon. Lululemon, well, that's doing really well too. But I don't think the growth isn't like Lululemon. Let's just compare. In the past 5 years, Lulu is up 139%, TJX 86%. TJX has a lot of stores beneath it. Lululemon just is kind of one store, Lululemon, but TJX has Marshalls, Home Goods, HomeSense, which I'm not too familiar with, and Sierra, which I'm also not too familiar with. But I'm very familiar with Marshalls and Home Goods. They started out as TJ Maxx. That's why it's TJX, a ticker. The company continued to focus on selling unrelated operations, including BJ's and Home Club, leaving it with just one brand. So it did get rid of BJ's, and it kept just their TJ Maxx brand. So Lulu, their 5-year annual revenue growth rate is 24%, which is by far the biggest in this industry. A lot of stores in this industry aren't really growing much. I mean, TJ's is growing 6%, which is kind of on the low side. Then you have the Gap, which is actually detracting. It has a negative 2% revenue growth rate the past 5 years. The thing is, Lululemon doesn't even generate 10 billion of revenue. Gap is more. Gap is 15 billion of revenue, and Gap is 1/5 of the market cap. But if you go out buying Gap thinking it's a great value, you might be unhappy, because this is the type of stock that will trade sideways for like 5-6 years and never go anywhere. With Lululemon, even though it's overvalued according to their price multiples, has much more upside potential, because it's a fresh, hot brand, and it's growing so much. But yeah, they're at 32 times earnings, 30 times free cash flow. I mean, Burlington is worse. But Burlington is so much smaller. It's only 15 billion market cap compared to Lulu's 50 billion. They don't pay a dividend, Lulu. I think once they pay a dividend, which I think they'll start paying this year or next, then the stock will go up a lot, because then dividend investors will jump into the stock. So yeah, so in a really solid balance sheet, they have the most cash ever, $2.2 billion. They never had so much cash on their balance sheet before. It doubled from last year. And they're buying back a lot of stock. That's what they do with a lot of that cash. Doesn't look like they pay dividends either. Yeah, they never paid a dividend, but that's going to probably change. So if you want to know how much stock a company buys back, you could look at the statement of cash flows in the financing section, the cash flow from financing section. In 2022, they bought back 800 million of stock. 2023, 444 million. 2024, 558 million. They did complete their 2024 fiscal year because their fiscal year ends in January, which can be a little confusing for some people, and if you want to know how much stock they bought back historically, well, they don't list it in the on the balance sheet. Some companies do. Some companies report treasury stock, but they don't. So you have to do a little digging. It's kind of built into the retained earnings. So let's see. Any other Reviva Pharmaceuticals is up. Veritone, Viking Therapeutics. Viking Therapeutics is not a small company, 9.2 billion market cap. Check Cap, Data C. They have 89% institutional ownership. Lululemon. Reddit is still hot. Reddit is still doing really well, up 14%. Has anybody jumped into Reddit? They're at 11 billion market cap. I don't know. I'm not a big fan of Reddit as an investment. The 18th. So what's today? Today's the 26th. So 8 days they've been trading, and the stock is up, 70%. So IPO'd at 46. Let's look at the candlestick chart because that's so here's the first day they started trading. So it looks like they opened at I guess 48. Yeah, I wouldn't touch Reddit either. It jumped up a lot. The first day it went from 48 to 50, and then 3 straight red days from 50 down to 46. I wish they made these charts easy to read. It's more like the formatting. Okay. So it was in the 50s from 322 to 325, and then a huge gap up on 326 into the 70s. So it's been in the 70s for a few days now. Let's see if Reddit, it does generate a lot of ad revenue. And that's how Google and Meta make 90+% of their money is ad revenue. Okay, Simply Wall Street does not value Reddit. Let's see. Let's see if they have some past performance information. So Revit had 228 million of revenue in 2020. 228 million. And what's their market cap? 11 billion. And they grew their revenue to 800 million in 2023. So they're still trading at 12 times revenue, which is a bit rich. But I think the market feels they're going to grow into their market cap. Or at least that's the hope. Negative earnings each year, as well as negative free cash flow. And operating cash flow is also negative. So something has to give, because they need to generate at least positive operating cash flow at some point. And they're not a new company. Remember the old days when a company would be profitable and make money before it went public? So they've been around 18 years. So I guess they're just, lots of companies just sacrifice sacrifice profits for revenue. So they're willing to overspend, spend a lot on growing their business in order to grow their revenue. Okay. So what's and they did a regular IPO. They didn't do a SPAC. So they filed for the public offering at the end of 2021. In June 2022, they acquired Meaning Cloud, a natural language processing company. Okay, so their IPO was at $34, 6.4 billion valuation. I mean, Meta's IPO, they were like, I think like $200 billion, or maybe $100 billion. They went public the next day on the New York Stock Exchange at 47 per share and rose to 50 at market close, reaching a market cap of 9.5 billion. I think at the time, I think Facebook was the largest IPO ever. $11 biggest IPOs of all time. Saudi Aramco. That's not traded in the US, Saudi Aramco. 28 billion. Baba is number 2 at 22 billion. SoftBank, 21 billion. Facebook is 8th largest, 16 billion. But that's how much money they raised. Their valuation was like 100 billion after the first day. Facebook. So see, here you go. They raised 16 billion, but the valuation was 96 billion. Because what a company raises is separate from what the company's worth. How does anybody value a company like Facebook? That was the question many investors were asking in 2012. Try to name another company whose IPO occurred after there was a Hollywood movie made about the company. For a while, it seemed like Facebook was set to conquer all, even briefly floating the idea of a cryptocurrency. Although its stock price is well above 2012, things are no longer so rosy at one hacker way. They're doing pretty well, I think, Facebook. They're a $1 trillion company. 1.3 trillion. So they're not struggling. Calm. Oh, CalMaine. 59, 2.9. Calm. So let's get the WAC. Let's get the future free cash flow. LULU is printing money. They're doing a good job. So, they don't really give a it seems pretty undervalued, right? Calm. 2.9 billion market cap. CalMaine Foods. They've been trading a long time. 2015, they were over $60 a share. I think their highest was recently 65 at the end of 2022. So they're still trading below 52-week highs at 60. What industry are they in? They're farm products. It's a good industry to be in. CalMaine Foods is an American fresh egg producer. Started in '69. Its eggs are sold mostly in Mid-Atlantic. That's a specialized field, just eggs. CalMaine is a public company headed. Let's see, they're 3 billion market cap. They're trading at 1x revenue, 6.5x trailing PE. So it's a pretty low multiple. They're debt free. They have $500 million of cash on their balance sheet. Yeah, the thing is, like, stocks like this don't usually move. Like, tech stocks move, but these kind of stocks just kind of like languish. unfortunately. So even if you identify a really undervalued stock, it can just let's see the industry. They return a lot to shareholders, it seems. Question would come, is there an outbreak of aviary flu? Does the stock get killed or maintained? I don't think it'll get killed, the stock. It's a pretty stable food to sell, eggs. There's always lots of demand for eggs. So let's see the PE. It's good to compare these things to the industry because on a standalone basis, it's hard to know if a company has a good PE of price to sales. But when you compare it to others in the industry, yeah, I mean, Archer Daniels is 10 times the size. So obviously there is potential. There is potential to become a lot higher. Tyson is trading at 35 times free cash flow. Well, Cal-Maine's has the highest price of sales. They're trading at 1.1 times revenue. These other companies are more attractive levels. PE similar. Oh, what's a dividend? I didn't look at the dividend. Well, a really high dividend, 7% dividend. I guess that's the big draw. It was 18% in 2023. They did bring it down. I guess the stock price is coming down, so the dividend is going up. Well, stock price isn't down much. It's actually up now. Why is the dividend so high? They don't pay a consistent dividend. It's kind of all over the place. I guess it's based off of their So here are their quarterly dividend payments. Oh yeah, they eliminated the dividend in 2020. They brought it back. They paid $2.20 in April 2023. And then the next quarter, 75 cents. Then the next quarter, not even a penny. And then this most recent quarter, almost 12 cents. ADM TSN. ADM TSM. So it's good to look at how the stock's performing relative to its peers. So COM is up 18% in 2 years, while the two big companies are down 33% in that same time frame. In the past year, COM is up 9%, Tyson is up 2%, and Archer Daniels is down 18%. But if you go back 5 years, Archer is up 44%, COM is up 32%, Tyson down 16%. I know there was some negative things with Tyson, but why does what about Archer? What was the negative news with that? They must have had some CVS. Yeah, CVS is a good stock to look at. It's getting close to 80. In the past 6 months, so it was 81 in January. So it's still lower than January. So, which is a good sign. If you're looking to buy CVS, ideally you want to buy it when it's not trading on an all-time high. But what we do, most people psychologically, we like to only buy stocks when they're trading at an all-time high and sell stocks when they're trading at an all-time low. Yeah, so CVS was much higher. It was well over $100 in 2022. I think that might have been its peak. No, its peak was in 2015. Its peak was in 2015. Then it came down a lot in 2019. So you can see it's all over the place, a stock like this. Root Inc. Yeah, oh, Root. Yeah, I've seen stuff about that. So like if you bought Root at IPO, or even like a year or two after IPO, you're still down like 90%. Unless you bought it in 2020, at the beginning of 2024, or I guess in 2022 or 2023. But we don't like to buy stocks when they get real low. We usually avoid stocks when they get low. They had to do a reverse stock split to stay above $1. Yeah, but Root it's such a timing game, because you see the stock was still in the 30s. This is split adjusted, so you got to remember that. In the 30s of 2022, it really bottomed out at the end of 2022. So even if you bought at the end of 2022, say for $7, you would have had to look at your account day after day for like a year straight and see like a negative. And then you would finally see a small positive, and then it would just be flip-flopping. Where you'd be up 10%, up 2%, up 15%. until finally recently it blew up. So Root, it went from 7 to like 60 in like what, 2 weeks or a month maybe. Okay, insurance. So what was the big catalyst? Why did it go up so much? Did they file bankruptcy? Because it looks like, okay, online car insurance company. Root was founded in 2015. Root stock surge accelerated after the company published exceptional Okay, so they had good results. Its revenue jumped 173% in the last quarter to 194 million. And management expects trend to continue. So here's their revenue since 2018. 40 million up to 400 million. It did drop to 300 million. It came up to 450 again, but that's still pretty much where it was, the revenue from 2020. So it's not like they still have negative earnings, negative free cash flow. So insurance is a tricky business. Warren Buffett understands insurance really well. But talk about a volatile stock. I mean, for a while, it looked like it was going to go bankrupt, the company, based on the stock price. Okay, well, not many people watching now, so I guess I'll sign off. Yeah, thanks for joining, and check out my Lululemon video. Talk to you later.